What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put at least 1 penny in that account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of the video. Go click on that Webull link. Open up your new Webull brokerage account today. Go get that free stock. Go get that free money. Well, guys, the CPI report for January 2023 came out today. And it was not an overwhelmingly good report. Expectations for month over month inflation was 0.4%. Inflation came in at 0.5%. Expectation for year over year inflation was 6.2%, but inflation came in at 6.4%. So did not hit expectations, and that's a concern. Prior months reports, November, December, were actually ahead of expectations. They actually show inflation coming down. And right now, the Fed has a decision to make. And I think the decision is going to be to continue increasing short-term interest rates because inflation is being pretty dang on stubborn, guys. And right now, the Fed cannot take their foot off the interest rate pedal, because if they do, there's a chance inflation could U-turn and start going back up. And we don't want that, guys. Although 6.4% inflation year over year was better than 6.5% year over year inflation that we got off of the December CPI report, it's still not trending the right way, in my opinion. 3 of the reasons why inflation went up was an increase in housing costs, increase in energy costs, and increase in food costs. So, yeah, man, the Fed is going to have to continue raising these short-term interest rates to continue to try to fight inflation. And, you know, at the beginning of the year, everybody believed, and even the Fed said this, that they were going to try and stick to 75 basis points in 2023. So basically get the Fed funds rate up to about 5%. But with this report today, you got to question that. You got to ask yourself, will they go higher? Will they go to a target rate or a Fed funds rate of around 5.5? Just to be able to continue to fight this inflationary thing that's happening, guys, because it's not coming down fast enough. And again, we've already talked about this red hot labor market, which is not helping, right? Because the more money people make, the more they spend. The more people are not worried about losing their job, the more money they spend. And even though rates are moving up and it's costing more to borrow money, which typically will deter people from trying to borrow money, we got to also think about, in lieu of people borrowing money, where are they getting this money from? Yeah, they're getting it from salaries. We got that. But they're also getting it from all of this pandemic real estate boom money. If you owned a home prior to 2020, or if you bought a home in 2020, 2021 and 2022 were very good to you from an equity standpoint, because your equity in your property increased probably between 40 and 50% in those 2 years. And a lot of people did 2 things. They either sold that property and took all of their cash, all of their gains, or they refinanced that property when rates were super low and pulled out cash. And people are using that money right now, guys, to spend and to live the life that they want to live. They're traveling more. They're buying things. Car prices are starting to come down, at least used car prices, so people are buying cars. People are just enjoying life because they got that windfall of money from that pandemic real estate boom. We got 65 million baby boomers that are retired or headed to retirement. And a lot of these people have a lot of wealth. They built a lot of wealth from 2008 in the stock market during the last bull market. And they also built a lot of wealth through real estate by owning primary residences in areas that have had a big real estate boom, and prices have went up and values have went up. And now these people are cashing in, selling these houses, taking their money out of their retirement accounts and living the good life. The hot labor market coupled with the real estate pandemic boom of 2021 and 22, and then these 65 million baby boomers who are flushed with cash and are wealthy. These are the three reasons why inflation is so hard to bring down. And that's the fight the Fed is going to have to fight. And the only way they can fight it is doing what? Increasing short-term interest rates. March of this year, the Fed will be meeting for the second time. Now, prior to that meeting, they should have the retail sales report, which will come out, I believe, this week as well. And then they'll also have the opportunity to look at another jobs report that will come out in, I believe, the beginning of March. So those two reports they'll also have. And they'll also be able to dissect a little bit further the January CPI report. They got a tough decision to make. Do we raise short-term interest rates by a quarter, like we said we were going to do, and the market thinks we're going to do, or do we take it to 50 basis points? We'll have to see. We'll have to see. More data has to come in for them to review before they make that decision. But as investors, we got to start thinking about what's going to be happening with short-term interest rates, because I've already told you guys, if short-term interest rates keep going up, the stock market stays in a bear market longer. If money is too expensive for companies to borrow, they don't borrow. If companies are not borrowing money, they're not growing. If they're not growing, they're not hiring people, right? That hurts their stock price. Anytime companies' stock prices are hurt, investors move on. They move their money to safety. They take their money out of companies, and the companies make up what? Our stock market. But it still presents a great opportunity for us, since we are long-term investors. We want to buy assets when they're trading at a discount, and we want to sell assets when they're trading at a premium. It's a great opportunity for us to be able to buy our favorite companies, our favorite ETFs while they're on sale. Great opportunity for us to do that through dollar cost averaging. And you guys know, we don't want to be the experts. We want to stick to proven investments that have a historical track record of building wealth and multiplying money. So we should stick to ETFs that track the S&P 500 and ETFs that track the total stock market. Those are our two investments, our baseline investments. Those are the investments, if we do it consistently through 2023, we will build wealth for ourselves in 2025, 2026, 2027. That's the key to building wealth, guys. Buying really good blue chip assets when they're trading at a discount. And this is an opportunity, guys, for us to be able to do that through paper assets in the stock market. So don't let that opportunity pass you by. I don't care if you got $100 to invest. I don't care if you got $500 to invest. I don't care if you got $1,000 to invest. The main thing is to be consistent with whatever money you can invest. Be consistent and just buy proven blue chip assets. And the ones I'm telling you, I recommend you consider are ETFs that track the S&P and ETFs that track the total stock market. They're proven. They multiply money. They build wealth. You don't have to be the expert. If you want those 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.